What is up, guys? This is Azam with Investify, and I'm so excited today that you're joining us for this free training on learning how to invest in the stock market. So, to break down, we will keep this training hands on. I don't like theory that much, I'm all about applications. So, what you will be learning is in this first part, we will show you how to open up a brokerage account, how to look for stocks or what are the stocks that are important, and perhaps we will even show you how to purchase your first stock. So let's get right into it, okay? So to get started, the one major brokerage that I highly recommend is Robinhood. Their website is robinhood.com. They're based in US, so if you're one of our subscribers from the US area, I highly recommend you get this app as soon as possible because they are free. They actually don't charge you any commissions on brokerages. So on trading on their platform, which is amazing, right? Now they do have other, unique products where they might charge you if you decide to purchase those products. But for the kind of trading we do, you don't need to do that. All right. So Robinhood is ideal. And if you use our code share.robinhood.com/AzamZ, you will get you'll get free money from them, a free stock to get you started right off the bat. So that's kind of cool to have something like that on your platform. Highly recommend Robinhood. Now, the thing is that Robinhood is a phone-based app. They're on Android and iOS, but they don't have a web app yet. So they're working on that. So in the meantime, to show you, we will go to TD Ameritrade, and we're going to use that as the app or as a platform where we're going to purchase our first stock. So let's get you started with that. When you log in to purchase stocks, what you need to understand is that you can't just go out to the grocery store and get a stock. Stocks are usually sold on brokerages like TD Ameritrade, Robinhood, and the other big one is Interactive Brokers. Okay. Now, to purchase these stocks, right, you need to have an account with one of these brokerages, obviously. So TD Ameritrade is one of those staples. They've been around for a while. They've done a great job in building a really solid platform here. So once you come in, you can build a very simple account with them, and you can fund it through your bank account. Now, let's dive right into the market. Let's see what is happening and how to look at purchasing your first stock. All right. So you come to the trade tab here, and then you choose buy and sell, and it brings you to this page. Now it's showing you all this information, and they have information below here as well. So what we do is that we put in the symbol. All right. So let's take Apple here, and let's enter symbol lookup. Okay, so that's Apple. All right. Now let me just get this out of the way. So over here, you can do a quick quote as well with them. This is another way to look up which stock you want to buy. And over here also, you can do a symbol search, right? So let's take a look at search by symbol. All right. And here is all the information that you ever want on Apple, right? It has its summary. It has the recent news announcements. Their signals are available, right? All this information that you need, their SEC filings. So very, very, very thorough information. This is why TD Ameritrade is really, really great. Like, they give you all the information that you need on a stock. That being said, right, you're interested in purchasing it. So you're going to click on buy. When you click on buy, it opens up a chain like this that we're seeing, okay? And in this, you have multiple actions available: buy, sell, buy to cover, sell short. We are interested in buy, all right? Then we choose a quantity. In this case, this is how many shares you want to purchase. So we'll put 1, and it gives you the option of choosing a stock, or option we're choosing just the stock. And now the order types are a whole bunch here. There's a limit, there's a market, there's a stop limit. So this is a very important part, because this terminology is something that people get a little confused with, and we want to assist you on this. So this is where they actually have an entire tutorial based on what each order type is like. So basically, a market order indicates you want the immediate execution. You want to buy it right away at the market price. You don't care. You're just like, take my money, give me the stock, right? That's what it is. So it is for more investors are concerned with order execution, as I just said, getting the stock, and you want to enter or exit position. So market orders can be used for buying and for selling. So you buy it and then it goes up, and then you're like, okay, I want to sell it. So you can use the market order and get out of the stock right away. And it's also used for stocks that have a lot of volume, have a lot of liquidity in them, right? So one thing that happens with market orders is, let's just say you're looking at the price of a stock and it's at $100, right? But it seems like it's starting to move up. So it's at $100.10, $100.20. You may put in a market order and it may show $100, but because of the volatility that some stocks can have, you may get filled at $100.25, or even in some cases at $99.80. So something to think about, right, when you're going for market orders. So that's that. Now let's look at the other order types. Limit order is the other one that we use. It indicates the highest price you're willing to pay for a security, or the lowest price you're willing to accept to sell a security. All right. Now this is where you define what price you want to buy something at and what price you want to sell at. So I'll show you an example. All right. Let's come here to the charts for Apple. All right, we're looking at Apple's chart. And so let's just say you think that $172.43 is a good price. But you're like, I think that this stock is going to go up. But for that to happen, it needs to go above $175. So you can put in a limit order, and you can put in that for $175. Or you can even put in for, looking at the chart, you're like, you know what? I want to pay only $173 to buy this. So you can put in a buy order at a limit order at $173. Why is that unique? Because now you are dictating the price you want to purchase something else at, whether it's at a higher price than the current price or even at a lower price than the current price. Okay? So that's where limit order is great. And it's also good when you have to sell your stock. Let's just say you put in a limit order of, you're like, listen, once it reaches $200, I'll sell it. So it's already in the system. So you don't even have to go in and wait for the price to reach that. It'll just happen by itself once it reaches that price. So that is where automation is so important in investing, right? And you can also use it to basically pause your payments and be like, okay, you know what? I want to protect my downside, so I can do it for 140. Because one day something might happen in the market and Apple might start dropping. So you can protect your investment on the low end like that. All right. So those are a couple of order types. I recommend, if you want to open up a TD Ameritrade account, go ahead, open up, because they do provide a free demo account, right? And so that's a great practice to have, especially if you're in the US, to get comfortable with purchasing your first stock. All right. And then this is important, the time in force. This is basically the time in force is the length of time your order will last before it is executed, expires, or canceled. What that means is you may put in a buy order at a limit price of 175. Now, now there's a few options here available, right? The first option is the day. That means that if you put in the order today, by the end of day, if it's a weekday, by the end of day, if the order is not filled, if you're not able to buy Apple at that price from the market, it'll cancel it. So the next day, tomorrow, you'll have to re-enter another one. I personally don't use day orders at all. What use are good till cancel, GTC, okay? And you can put in a date. So usually it's 6 months in the future. So it tells you right here, like June 2018 is the date that it'll actually cancel, right? It gives it a 4 months to 6 month space period, right? So that's how you should actually approach if you're getting into a limit order. When it's a market order, I still do good till canceled. It's just it gives you more time to buy into the stock that you're interested in. Okay? Now let's just say you've already purchased the stock, right? What's next, right? So the two major order types are market orders. Number one, which lets you buy at the market price or sell at the market price. And for that, you have to be there, right? You have to enter in. The other one is limit orders, right? Where you can actually buy and sell at prices you have dictated ahead of time. So you don't even have to be there. You could be sleeping one morning and you wake up at 9 a.m. and you're like, oh, wow, my order filled. And I've just bought some Apple because it met the price that I was looking for. So those are two of the most important ones. And the approach we take is always long-term investing. So that's what works for us. Now, that's the best way to get you guys started with buying your first stock. So, what have we reviewed in this video? The first thing is that if you want to buy a stock, you have to go through a brokerage. And the recommended brokerages that we have for at least the US is Robinhood.com and TD Ameritrade. Okay. Now, the third one that I highly recommend is for individuals that are international, right? They're outside of the US, is Interactive Brokers. Okay. Now, Interactive Brokers are probably the best to open an account with, and this is not just for international, but for even U.S. citizens. It's because of the tools that they provide. Like they have a whole lot of depth in the way that they do things, and they have their products, they have their pricing. They're very affordable, right? They'll charge you less than TD Ameritrade. They usually charge you $1 commissions, right? So they're very, very good in terms of that. And they have this whole educational section, which is great for buying your first stock and everything. It's very similar to what TD Ameritrade does or even Robinhood does. That's the beauty of this market, is that the terminology doesn't change from one exchange to the other. It's still going to be the same approach. Buy at a market order or a limit order. So guys, that's the first video that I wanted to show you all. And let's see how the next video goes then. All right.